Hello everybody, this is Rob Henderson, CEO of Amerigo Resources, and I'd like to provide an update on recent events in 2019 and my latest thoughts on the copper market as we approach the end of the second quarter. I will be making forward-looking statements within the meaning of applicable securities legislation, and you should review our documentation filed on the Toronto Stock Exchange. Over the past few months, I've been in contact with many of you explaining the events that occurred at the beginning of the year. But I know there are still some investors that I've yet to talk to, and potentially new investors who have been watching us but may still be unsure of what happened. I hope this will answer any remaining questions and will help you see the value I believe is reflected today in Amerigo's share price. I'll start first with the bigger picture of copper prices. As we approach the end of the second quarter of 2019, copper prices have weakened, and the dominant factor remains the impasse between US and China regarding trade. This negative sentiment has continued to keep copper prices contained below $3 per pound, despite exchange-listed copper inventories remaining very low by historical standards. Our banks use Wood Mackenzie as their lead copper price forecaster, and Wood Mac continues to forecast copper supply deficits that will lead to rising prices. During the second quarter, there had been additional reports of copper mine production shortfalls. Chile and Peru, the two largest copper producing countries, have reported year-over-year production declines of over 7% and 5% respectively, while globally production is down almost 2.5% year over year. However, the demand side of the equation remains robust, and worldwide consumption of copper is increasing by about 2% every year. The future demand drivers of infrastructure, electrification, electric vehicles, and clean energy have not gone away. If China and the US resolve the differences, it appears that sentiment towards copper prices could quickly turn positive. Now I'd like to address what happened specifically to our production so far this year and where we are now. It has been a frustrating time for shareholders and management alike, but I want to make clear that we can see the light at the end of the tunnel. The first challenge faced by MVC, our Chilean operation, was the unexpected announcement by El Teniente that their tailings channel would be shut for a week in January. 1 week is far longer than the one-day maintenance shutdown we typically see at the beginning of every year. On the positive side, the last time we had an extended channel maintenance shutdown was about 8 years ago, so they don't occur frequently. This year, during the extended shutdown, we quickly performed as much maintenance on our assets as possible. Basically, we made the best of a less than perfect situation. But in the end, the unexpected production shutdown had a negative impact on production and disrupted the startup of the new plant. The second challenge we faced is the one we are currently working ourselves out of right now. This challenge is from a zone of fines, clay and iron in the Calcanis deposit. And this material has created some difficulty for our processing plant. I want to explain this in a bit more detail so that you'll understand why we have confidence that we can get through this and achieve our production targets in the future. I have put a new slide in our investor presentation that shows the top-down sequence of how we mine the historical Calcanis deposit and the different types of material contained in the deposit. The key thing to remember is that our processes are fine-tuned to get the best copper recoveries from the type of material we have the most of, which is the coarse sulfide material. The first thing to notice is the very top layer of the deposit, where there's a thin band of oxidized material. We see about 2 to 3 meters of the surface material has been exposed to the elements for a long time, and the sulfides have turned to oxides. And in general, oxidized material exhibits a lower recovery rate than sulfide material, as our flotation plant is optimized for sulfide recovery, not oxide. We can't avoid processing the oxide because our contract calls for the removal of all the tailings from Calcanis, so we don't have the option to leave the oxide material behind. We deal with the oxide material every year as we start mining from a new position in the pond. And we deal with it by blending with it sulfide material so that the overall recovery is maximized as best we can. Blending is a very important technique we use to keep the plant running efficiently. The issue we ran into beginning last quarter, however, had to do with a thin layer of fine sulfide material with very high levels of clay, fines, and iron. All of these things lower our recoverability of copper in the tailings. Now, this layer is located about 25 meters below the surface, and it is about 10 meters thick. The exploration drill hole data confirms that this material is confined to a small localized zone, and it does not extend across the entire tailings pond. We aren't 100% certain of how this material got there, but what's important is that we have a very good idea of the size and location of this zone. We think that this layer was formed back in the early 70s when the Calcanis Dam wall was increased from 35 meters to 50 meters high. To do this, cycloned coarse sand was placed on top of the existing quarried rock wall. Back then, the cyclones would have removed all the fine material, and we believe that this fine material was collected in a small pond on top of the existing tailings at a level of approximately 25 meters above ground. So below this pond is normal tailings, and above this pond is normal tailings, as once the wall construction was complete, normal tailings was placed on top of the pond of fines, covering it up. Now, MVC is still in the process of ramping up its extraction capability at Calcanis. Extraction started 4 years ago at the surface of the deposit, and every year MVC has progressed deeper and deeper into the deposit. The current sump, which is where we direct all the copper-bearing slurry from our high-pressure hoses, is located about 37 meters deep into the deposit and has been operating for over a year now, and consequently MVC has run out of options to extract good material to blend with the poor material. The fines zone has large quantities of clay and iron which contaminate our concentrates, and the surface oxide material continues to be a challenge for the flotation plant. In July this year, MVC will start extracting material from the new sump, located about 48 meters deep, right at the very bottom of the deposit. To dig this new sump, MVC used conventional trucks and shovels to remove the material, and consequently this material has been tested extensively, and we know it is coarse, sulfide, high grade, and good quality. So once the new sump commences operation, we can expect a rapid increase in recovery and copper production. As this new sump will provide access to the large volume of good quality material located at the bottom of Calcanis, this will give MVC the ability and flexibility to blend poor quality material again. I think that it's important to keep in perspective the size of the poor quality fine zone, because it's a very small percentage of the overall resource we have at Calcanis. The historical drilling results indicate that the low recoverability fine zone contains less than 12 million tons of poor quality material. In comparison, the entire Calcanis deposit contains 270 million tons of material. We think the fine zones represents less than 5% of the deposit, and by the end of June, we will have largely sent it through the plant. Remember that at its simplest, we are capturing copper on bubbles in the processing plant. These bubbles rise up through the flotation tanks to where we can collect them and make the copper concentrate that we deliver to Codelco. Large variances in the characteristics of the material going into these flotation tanks, such as how fine the material is or its mineral composition, can greatly affect the chemistry that is used to recover the copper. The best way to deal with changes in the tailings is to try and minimize the variability of what's coming in the front door of the plant. And that's why we blend the different types of materials as best we can. The bad news is that we couldn't manage it at the beginning of the year. But the good news is that we will have gone through a large portion of this material by the end of the second quarter and should not have to deal with the same situation again. So to wrap up, I hope I've shed some more light on our project ramp-up hiccup. The details of copper production may not be tremendously entertaining, but it's important to to the understanding of how the company moves forward. We expect the second half of 2019 to put us back on track to meet our lowered full year 2019 guidance of 70 to 75 million pounds of copper and 2 million pounds of molybdenum at a cash cost of $1.45 to $1.60. We already know that the Phase 2 plant expansion works well because we were able to declare commercial production in December last year. In Q3 this year, the new concentrate regrind circuit will be operational, and this will provide an additional boost to our plant efficiency. Full production levels in Q3 will then set us up to meet our longer-term annual guidance of between 80 and 85 million pounds of copper and 2.5 million pounds of moly at a cash cost of $1.30 to $1.45. After production is back to where it should be, and depending on copper prices, we intend to reinitiate the dividend. We also intend to address our $60 million debt facility with our lenders and obtain some additional flexibility. Amerigo continues to have unhedged exposure to rising copper prices. This offers tremendous financial leverage and flexibility to return capital to shareholders. As substantial shareholders, management remains enthusiastic about the future. We think there is tremendous value that has been hidden, both by poor global sentiment and this brief pause in our ramp up to full expansion production levels. Thank you, and please feel free to call us with any questions.